In this video, we are going to focus on the manufacturing accounts in the general ledger. We have learned that during a manufacturing process, costs are incurred for materials, labor, and overheads. These manufacturing costs are recorded in the general ledger as follows. The materials purchased are recorded in the raw material stock account. The labor costs are recorded in individual expense accounts such as the wages account and the salary accounts. And the overhead costs are recorded in individual expense accounts such as the rent account, electricity account, and the depreciation account. So let's first focus on the materials. This is also the most complicated portion. The following flowchart shows the route that material takes in the production process and in the accounting records. So, first of all, the raw material stock is purchased and it will then be placed in the warehouse. So, how do we treat it in the general ledger? The raw material stock account is debited, which makes sense. It's an asset. Assets increase on the debit side. So debit raw material stock. And then bank or creditors control account will be credited. So as already indicated, the account classification of this raw material stock is that it is an asset, because that is now our raw material, so it's our possession. So now that the raw material stock is purchased and in the warehouse, from there the factory will request the raw materials for production, which are then transferred from the warehouse to the factory. So this whole process you can think actually as a three-room process. The first room is the storeroom, the next room is the factory. The third room will be the display area from where the customer actually can see the product and purchase it. So now that the factory requested this, we know we debited raw material stocks previously, so now to get rid of that, we will have to do the opposite. We will have to credit the raw material stock. And we will have to debit another one, which we refer to as raw materials issued. And this raw material issued account we will classify as an expense account. It's a nominal section account. So now in the second room, the factory, because remember the first room is the warehouse where we stored the material that we purchased. Now the factory requests the goods. In this factory, which is the second room, raw materials are processed during the manufacturing process. So we know we had this raw material issued account that we debited. We will have to get rid of it, therefore we will have to credit the raw material issued account. And now we will therefore have to debit another account, and that account we refer to as the direct material cost account, which is a cost account. But then there's even a further process where this direct material cost account is then credited to the work in progress, is credited and transferred to the work in progress account, which is debited. Okay, so remember, direct material costs was debited originally, so that's why we now have to credit it to get rid of it and transfer it to the work in progress account, which is now debited. And this direct material cost account, as already mentioned, is a cost account. And we get rid of it and transfer it to the work in progress account on the debit side, and that's an asset account, and we know asset accounts increase on the debit side. So we basically started with an asset account, we transform it into an expense account by creating the raw material stock account, and then we created it in, or then we transfer that expense account into a cost account by creating the direct material cost, and then finally transfer it in an asset account, namely work in progress. So it's quite an evolved process. So now we mentioned there are 3 rooms, or we can think of this as a 3-room process. So now that the product is completed, it will be transferred, or the final product is transferred from the factory to a warehouse for finished products to be sold, or what I rather like to refer to as the display room. So we know the last thing that we did is we debited our asset account work in progress. So now there's a debit balance. We need to get rid of some of those debits as we complete the product. So therefore we will have to credit the work in progress asset account and debit our finished goods account, which is also an asset account. So then finally we have to focus, these were all the direct materials. We also have to focus on the indirect material transferred from the warehouse to be used during the manufacturing process. So that's a bit simpler. The indirect material, which we originally would have debited as an expense, we now get rid of it. We will therefore have to credit indirect material, and we transfer it to the manufacturing overheads. Because remember, anything indirect goes to manufacturing overheads, whether it has to do with labor or material or other expenses such as rent and depreciation. They all have to end up in manufacturing overheads, which is an asset account. So the indirect materials already mentioned is a nominal account, expense account. Manufacturing overheads is our cost account. I previously said, yeah, no, it's fine. Okay, so labor. Salaries and wages are paid to different employees for different reasons. Not all salaries and wages relate directly to the production process. Certain forms of labor relate to indirect manufacturing costs, treated as manufacturing overheads. Some salaries are an operating expenditure and are recovered from the gross profit. The total salaries and wages paid is debited in the salaries and wages account in the general ledger because it's an expense. Expenses increase on the debit side. So direct labor, wages paid to factory workers directly involved in the manufacturing, are periodically transferred from the salaries and wages account, which we now know have a debit, to the direct labor costs account. So we will have to credit salaries and wages, the portion that relates to direct labor, and therefore debit our direct labor costs, which is in cost account. Now that it sits in this direct labor cost account on the debit side, some of it will then be again transferred to work in progress. So we know we have now a debit in this direct labor cost account, so we have to credit this direct labor cost account and debit work in progress, which is our asset account. If we look at the indirect labor, salaries paid to workers not directly involved in the manufacturing, but still working at the factory, e.g. factory security, and also your supervisor, etc., are periodically transferred from the salaries and wages account, which we know have a debit balance, it's an expense. So we have to credit it and debit manufacturing overhead account, which is our cost account. So direct labor will end up in work in progress, and indirect labor will end up in our manufacturing overheads. We said anything indirect end up in manufacturing overheads. Then we have operating expenses, salaries and wages paid to people responsible for the administration and management of the business, i.e. they are not directly involved or involved at all in the production process, like the secretary, are closed off and transferred to the administration cost account. So we know again, salaries and wages, debit balance, we will have to all credit that account with all the amounts relating to operating expenses and debit therefore the administration cost, which is a period cost. This is now not a cost account because it doesn't relate at all to the factory. So we refer to it as a period cost. And then we have operating expenses that relates to the salaries and wages paid not to the admin people, but people responsible for the sale, the distribution, and the marketing of the product, like the sales representatives. So again, we know salaries and wages have a debit balance. We now have to credit it with the portion that relates to these sales representatives and those kind of people, sales manager, etc. And so that is now transferred to the sales and distribution account. So since we now have to credit salaries and wages, we will have to debit sales and distribution account. And this is similarly as the administration cost account, also a periodic cost, as it does not relate directly to the manufacturing process. Then, now that we have treated direct material and direct labor and even some indirect material and indirect labor, let's look at the other overheads. When manufacturing overheads are incurred, various different expense accounts are debited, because we know expense accounts increase on the debit side. So we have the water and electricity account, the insurance account that relates to insurance of the factory, the maintenance account that relates to maintenance of the factory or factory machinery. The part of these expenses allocated for manufacturing is then periodically transferred to the manufacturing overheads account, the one where we already saw the indirect material and the indirect labor is transferred to. In turn, the manufacturing overheads are allocated and transferred from the manufacturing overheads account to the work in progress account. Okay, so let's just run now through this. So let's take an example like the electricity account. We know it has a debit balance. We now therefore first have to credit the electricity account and debit the manufacturing overhead account, our cost account. Okay, and so now that it sits on the debit side of manufacturing overheads, and it can now include a bunch of accounts that will sit there, like the electricity account, insurance, the maintenance, the indirect labor, the indirect material from previous slides. All of that now sits in the manufacturing account on the debit side, and then we will get rid of some of those debits. We will credit the manufacturing overhead account and therefore now debit our work in progress account. So in turn, the manufacturing overhead that are allocated and transferred from the manufacturing overheads account to the work in progress account. The following flowchart shows how water and electricity is allocated and recorded in the general ledger. So water and electricity, as we said, is debited, it's an expense, so expense accounts increase on the debit side. So then the water and electricity portion for the factory will go to the manufacturing overheads account. So we would credit water and electricity to get rid of that portion and debit therefore manufacturing overheads account. And then in our manufacturing overhead accounts that have now debits, the portion of, they will now sit as indicated, many different manufacturing overheads on the debit side. We will get rid of them by crediting manufacturing overheads and debiting work in progress account. When we look at the water and electricity for the office, that's also part of our water and electricity account that was already debited. So we will credit the portion that relates to the office water and electricity in the water and electricity account and debit another account, namely administration costs. And then that is a periodic cost. So we sit now with, on the debit side, all the various administration costs, which includes the water and electricity, the insurance of the office building, etc. We want to get rid of these figures, so we will credit that administration cost account and therefore debit profit and loss account, which makes sense. In our profit and loss account, if we visualize it, on the debit side we have all the expenses, on the credit side we have all the incomes. So let's look now at the allocation of manufacturing costs. The flow and allocation of manufacturing costs may be summarized as follows. So we have the materials, we have the overheads like the rent, the maintenance, the insurance, the depreciation, all the ones that relates to the factory, and then we have the labor. So the overheads, as indicated previously, will go to, all of them will be on the debit side of the manufacturing overheads account. The indirect materials we also mentioned previously, it will in the end end up in the manufacturing overheads account. And similarly, the indirect labor will end up in the manufacturing overheads account. And then in our manufacturing overheads accounts on the debit side, we will have like the indirect material, the indirect labor, the rent, the maintenance, insurance, the depreciation, all of those entries on the debit side of the manufacturing overhead. We get rid of it by crediting manufacturing overheads and debit work in progress. And then the direct materials we know will also end up in the work in progress account on the debit side. Similarly with the direct labor, it will also end up in work in progress on the debit side. So now if we visualize our work in progress account, on the debit side we have direct materials, direct labor and the manufacturing overheads. And then as the product is finished, we will credit that work in progress account and debit our asset account, finished goods. So the completed products are physically moved from production into storage, or what I will refer as the display room, where it's ready to be sold. The movement is recorded in the general ledger by transferring the costs allocated to those products from the work in progress account to the finish account as shown above.